Steve Englander is joining in. He is Global Head of G10 FX Research and North America Macro Strategy at Standard Chartered Bank this morning. Steve, what a morning to be speaking, at least morning for us. So how worried are you right now? The Strait of Hormuz has never actually been closed in the last 5 or 6 decades, though they've threatened to do it several times. Is that now the biggest concern?
Well, I think it's the immediate concern to markets. And, obviously the oil prices responded significantly, but it's nowhere near the levels that were feared if there was real disruption in oil markets. And as your colleague mentioned earlier, there's, markets are the fat tail that has emerged from this war is not as fat as other episodes of geopolitical tension. So there's things could get worse. They're far from pricing in the worst outcome, even though they're pricing in a lot of uncertainty at the moment.
Steve, so how big is this uncertainty? I mean, there are people on either sides. One set saying that, oh, is this the start of, or wondering whether this is the start of a larger conflict? And two saying that with the US wading in, this probably marks the beginning of the end. Which side are you on?
Well, I wish I had the answer to that question. I think
the hypothesis, Steve.
I think that there's incentives on both sides. I mean, overnight we saw that the Iranian attacks on Israel were relatively muted, probably the lowest in a week. There's various signaling going on that may be looking for room to de-escalate. So we'll have to see how this plays out. I don't, both sides can do damage to each other. The question is whether they want to at this stage or want to back off and see what happens if they sort of give peace a chance in coming months.
What's the worst case scenario here, Steve? Just trying to understand from equity markets because, and all of these asset classes, because so far there seems to be a sense that it won't go further than this. But what would be the worst case scenario? What would be the best case scenario from here on?
I think that the best case scenario would be what I discussed now, that both sides decided that they've made their point, that they'll inflict damage without any gain on each other in the future if they persist. I think the worst case scenario would be that if it became a broader war, or if the Straits of Hormuz were blocked for an extended period. At the moment, I think global oil inventories are pretty high, so it might not be as big an immediate issue, even though there'd be some damage done. But I think the markets are being very careful not to really price in the worst case scenario here. So I think unlike say immediately after Russia invaded the Ukraine, or we're seeing sort of limits to how much are being sold off. So I think that this is sort of a unique geopolitical event in which markets are the fat tails are not as fat as they generally are.